What's going on, everyone? How are we doing today? Looking at a little bit of a breakdown here. I've got this trend line right side of the screen. We're looking at a 1 minute time frame. Left side of the screen, I've got my 1 hour time frame up. Market continues to see weakness again today. You know, nothing has changed there. A little bit of a bounce here. They got rejected at our lower Bollinger Band, kind of pushing back down, creating this inverse hammer candle. One thing that I'm looking at here, definitely if you confirm 19,521, you're going to continue to stretch down. There was a little bit of a trade here through this trend line break. Again, going back about 3 candles ago, we tested yet again 1, 2, 3 touch points here, and then finally broke through. 8:56 Pacific Standard Time, could have taken a little bit of a scalp there. Now we are back testing this trend line and kind of holding suit here. Definitely looking at more potential continuation here if we cannot get back over the trend line. I'm also looking at a couple of areas of supply here, being at the 50 and the 50 and the 200-day moving average. Pretty aggressive little sell here through that trend line. See if that trend line wants to hold suit. Definitely want to be a little bit more cautious and protective of your position sizing in a market like this, because even your little snapback bounces can, they can bounce 20, 25, 30 points at a time here. So you definitely don't want to risk too much here. Especially as we're coming into lunch as well. You could see a little bit of a dead cat bounce going into lunch, being that the pressure initially was down. $19,615, little bit of resistance there. It does want to get up and kind of back test that area. A lot of resistance here. Testing this 1 minute 50-day moving average. Getting rejected yet again here at this Bollinger Band. The level I'll be watching is the previous hour lows down here at 19,550. Resistance going to remain firm at 19,607 as of right now. to mark out the previous hour low here so I could see it on my 1-minute chart. That's the previous hour low. We could be coming to test that 540s area. Hey, what's going on, David? Good morning, good morning, good morning. How you guys doing today? Right now, I'm just watching to see if we're going to back test this previous hour low here, around 19,540s. If it does, you could get a little bit of a wick fill from that previous hour candle from 7 a.m. Pacific Standard Time. So definitely watching that. Good morning, good morning. Yeah, it's for me, it's morning. It's still 9 o'clock here in California. Other people's afternoon. A little bit of a battle here at this previous hour low, trying to defend it as of right now. We do have a Bollinger Band from the 1-hour chart trying to act as an area of resistance here. If this really starts to crack this 550s area, you could definitely see some potential down, but we have a little bit of a dead cat bounce area here, potentially into the 20 period moving average at around 590. It is lunchtime, so you could see a little bit of a dead cat bounce reversal. Like to really see this come all the way down through 50s. I don't know if it wants to do it right here on this test. We could probably still need to see a little bit more of a bounce to get more sellers involved. 19,620 is our next resistance. The trade I'm really looking for is a trade through the previous hour lows here. So I'm looking for something to break down below 19,550. That's what I'm looking for. I have no interest in longs. I don't really care if this bounces 200 points. I just have no interest in it. Again, guys, we are in a correction, so you definitely want to be a little bit more cautious on all of your longs, whether that's, avoiding them, whether that's sizing down, whether that's um, quicker take profits, whatever you got to do. The sell pressure is definitely a lot stronger than the buy pressure, but the only thing that you need to keep in mind in these type of environments, and watch this as we come down through these previous hour lows here, because I'm pretty confident this is going to break. Um, One thing that you need to be aware of is that because of the move down over the past 3 to 4 weeks has been so violent, that your little pops, your little bounces in between the overall macro move can be violent. 25, 35, 40 points, and we're still going down, right? It's not like nothing's changed. What tends to happen a lot of times to people is they tend to try to call the bottoms. Hey, we're starting to bounce, this is going to be it, let's just focus on going the other way now. And it's really not the case. I mean, the buyers this week, I would say, I was calling for at the end of last week, but between the end of last week and this week, they really have something to prove here. If they can't, the longer we spend under this daily 200-day moving average, the worse that it's going to be for the overall markets. And right now we're down about anywhere between 11 to 12.5% across the board from all-time highs, and which is putting us in correction territory. Um, but my thought process, I've been around these markets for a little bit of time now. My thought process is, if I kind of look at this from the outside in, the bigger picture here, guys, really watch this previous hour low here. There goes the flush. There goes the flush. We're gonna get this flush here. Watch that. There goes the flush. Let's see. There's the break. There's the wick through. Let's see if there's some follow through here. 543, 41, 40, 43, 40, 39, 39s. That's your first break here. If you're looking for an entry here, wait for a following 1 minute candle to confirm that break. So that break, if you look at it, low price 19,539. Keep your eyes on that. Keep your eyes on the 539, guys. For example, I mean, look at this bounce. It's insignificant, but it's 14 points against you. Just keep your eyes on the bounce, on the 39s. If we confirm 39s, you're going to pick up a quick scalp on this. It's the only thing I'm watching right now. Where I want to get out of this is going to be dependent on how violent the move is. If it stalls through 39s, I'll just quickly exit. I'm looking for at least 10 points. You know, but back to what I was saying, it's, you know, your sell bias underneath the daily 50-day moving average. Now, it makes things easier in terms of, hey, when you are on the right side of the move, because of the violence, because of the range, you're getting filled for take profits very, very quickly because the range is extended. Keep eyes here, guys. Keep eyes on these 39s. Because that range is extended. Keep eyes here, guys. Keep eyes here. 39s, 40s. Needs to break 39s. Breaks 39s, you're going to get a nice move. This wick went down to 38 barely. Not enough time for me to get in on a market order. Didn't hold long enough. Again, be very careful here. I would definitely recommend that if you don't have a little bit of experience under your belt or enough chart time of trading conditions like this, I would definitely find something else to do. Very tricky market to trade. There, I'm in this position now, guys. I'm in this position now. 34s, 33s. I want this to go down to 30s here. I will get back out of this trade if it snaps over 40s. If it snaps, really starts to snap back over 40s here, 42, 43. I need to hold suit here over under. Gosh, the range is so fucking big. I need this to hold under 55, 60, to be honest. I don't want to give it all that much room. To get back down below 40s, or else I have to cut this trade. And this is the problem with this type of market. You can get quickly wicked into this, but because the range is so extreme, you're going to be put into a little bit of drawdown here. There's the 39s again, 37s. I need this to get down to 30s. I need this to get down to 30s here, 33, 35. I need just a little bit fucking more out of this thing. 34, 33, 32. I'm going to peel one off there. Got peeled off at 34 and a half. 31s. I've got one more on the table here. 29s. 29s, 28s, 27s. I'm out, guys. I'm out. Son of a bitch. The market is making you absolutely work, even though the strength is there. You know, it's easy, okay? It's easy for some dipshit to say, well, the market's going down, just hold the position, right? It's easy for a dipshit to say that. The thing is that this fucking range, you know, is 20, 30 points at a time, you know? So you can't put any size. That's the problem. It's getting the size behind the idea. Okay? The ideas are there. The ideas right now, it's very simple. Wait for these small bounces and then fade them. Very simple. Wait for us to take out previous day low and then fade it. Very fucking simple, right? Wait for us to lose a 30-minute opening range, the initial bounce. It's very simple. The hard part, managing your size. right? I can go out there and put 1, 2 micro contracts on this thing and let it dance around all day for, 40, 50, 60 points. I don't want to do that. There's no money to be made doing that. And it's just, it's not where my patience level is at. I need to get size behind an idea. I need the idea to work, and I need it to work now. And if it doesn't work, well, then guess what? The market will just kick me in the face, and I will continue to trade another day. But that trade worked. But gosh darn it, I was in drawdown. At least I got in below the 39s on the second attempt. Probably got filled closer to 38 here. Let me see when I got filled. 30, 38, 25. So, and yeah, it bounced on me against 7, 8 points very, very quickly. So when you're putting on size like that and you're getting into a position, again, and I'm not even trading big size, like I'm trading a couple mini contracts, but you start to go down 7, 8 points, 9 points when there's a potential, because of the range, that this thing could snap back 25, 30 points. It's hard to control that, right? It's hard to control that. So there's going to be a lot of instances here where in the foreseeable future, I might have to exit a position that is truly a winning position. It's a winning entry, but I'm going to have to exit just due to sheer range, right? Just due to sheer range. And you're going to have to be okay with that. And if you're not okay with that, you're going to get absolutely chewed up and spit out. I'm going to be the first one to tell you guys, I was trading with people during the pandemic. I seen a lot of people make a lot of money in the pandemic. I seen a lot of people get scared because their portfolios were losing a lot of money during 2020. And then I also seen the 2022 bear market that we had for the better half of 12 months, where the market declined about 32%. Okay, where nothing seemed to work, and it was just, a constant slow trickle grind down that seemed like it was never going to end. And I watched a lot of people try to call bottoms. I watched a lot of people trade size that was beyond their means. I watched a lot of people not learn how to just sit the hell out of the market and wait for a better opportunity. Look, I'm full transparency here. I am trading probably about 60% less of the total number of trades that I normally take. 60%. So if I'm normally taking 5 to 8 setups a day today, I'm trying to fucking find 2 or 3 good ones. And then whether they win or they lose, that's beyond my control right now. That's beyond my control. Anyone who is saying that it's a fucking easy market are going to be the first ones that are going to be out of this market in the next 6 months, because for every trade that you feel is easy right now, because you're getting lucky, because the market is just washing out and you're on the right side of the short position, hey, it's not that fucking hard when the market is washing out hundreds of points a day to find some type of entry to get short, right? What's the hard part in that is trying to manage that size so you can even be involved in the play. Okay, because again, for one person to say, you can, everything looks perfect in hindsight. So when you look at this chart and you look at the tape and you start doing your back testing tonight, which I hope all of you back test each and every single day, because if you don't, I don't know what you're doing anyways. You're going to look at this market be down 600 points, 700 points, and be like, well, I should have just got short anyways. But the thing is that you can get short, and in the midst of it going short, it's bouncing in the same candle 20, 25 points. How are you going to react to that? How are you going to deal with that? One, size down, play micros. What's the downside of that? You don't make any fucking money, okay? You don't make any money. So either be comfortable with not making any money, taking out small cash, or holding longer to try to catch a little bit more of an extension move, right? Because you can definitely, if you're in on the right spot, catch 100 points on this thing. But you have to be able to understand that. And it's a very difficult time to be trading, right? Again, the number one thing that I hate is for people to say, well, yeah, things are working great right now, and I love everything. Things are not great right now. Things are not great right now. And if you think that they're great right now because you had a good trade or you had a good day today, is preposterous. Okay, it's preposterous. The market is saving your ass because the range is so big, and as long as you're somewhat relatively short, you're going to make some type of money. Okay? But it doesn't mean that you're a rock star trader, and it doesn't mean that this cycle is going to last forever, and it doesn't mean that we're going to continue to get these ranges, because you know what also comes along with corrections and you know what also comes along with bear markets is periods in time where you're grinding down 200 points in a day. And guess what's happening in between those 200 points in a day? 50-point bounce, consolidation for an hour, 50-point drop, consolidation for an hour. And guess what's happening to you in those periods? You're getting chopped. Absolutely getting chopped. So for everyone who found it very easy when the market is just flushing and they can just, click the sell button and make money, you're getting absolutely destroyed. So pump the brakes on you think that this is an easy market to trade, or all you have to do is get short and you don't really care about, the macroeconomics and the macro fundamentals of what's going on in the market. Right now, the market is extremely internally weak. And again, my opinion, Trump is going to drive this market down. And everyone wants to say, well, I thought Trump's a businessman and he wants the market to go up. Yeah, well, guess what? Trump can't make the market pump too fucking much if it's at all-time highs, okay? That's a fact. So get it through your head. He can't pump the market. He can't toot his own horn and pat himself on the back on how he changed the economy and he made everything better when you're trading at all-time highs with interest rates between 6 to 7%. You just can't do it, okay? You can't do it. So also, what is his administration? Now we're getting a pump here, guys. Be careful on this pump. It is lunchtime. You might get a little bit of a dead cat bounce for the remainder of this 30 minutes of lunch. Remember that we're also, look at the 1 minute chart, we're also putting in these lower highs. In order for us to even break this short-term downtrend, we need to start closing over 615, and we need to hold 615. Over 615, you have room to 680. So just be careful here, okay? It's not doesn't mean that this is the end of the road for today. It could be the market has pushed down a lot. Is it due for a bounce? Is the market due for a 1 or 2 day just relief bounce? Not calling for the bottom, just saying 1-2 days, little relief. Are we let's breathe a little bit here. Is the market ready for that? Sure. Is it going to happen today? Is it going to happen tomorrow? I don't know. We're going to have to let the facts show us that. The facts are we reclaiming supply? Right? The big picture is here. Even on your hourly chart, the NASDAQ hasn't reclaimed any supply today. So this dead cat bounce here is completely irrelevant. So if you're trading these type of reversals and you're trading these type of bounces, guess what? You're not getting in here thinking that you're going to make 500 points on the run up higher. You're getting in here, you're extracting a little bit of cash flow, and you're moving your ass to the sideline and you're protecting yourself for tomorrow. Because if you don't go into this market and you don't go into this cycle with a mentality that you need to protect yourself to get into tomorrow, well then guess what? You can use code DAnthony and get Apex evaluation accounts because you're going to continue to blow them left and right. Okay, does that make sense? Protect yourself. I don't want people to be out there spending hundreds and hundreds of dollars on evaluations and paying for activation fees just to put themselves in a hamster wheel and continue to be in the same rut of a problem that you are in the beginning of the year. I want everyone to be Q3, Q4 actually starting to find some success because they flipped the switch in their brain to, for one, understand that it's not the strategy that's going to make you a winning trader. It's not a bull market, bear market that's going to make you a winning trader. It's you actually being realistic and making adjustments to what's going on in the market and letting the facts tell you what's going on, right? People can be bullish all they want. The fucking market is below the 200-day moving average. It's not bullish right now, okay? There's a plan that's going to be in place. Do I think that the stock market's going to zero? Absolutely not. I'm probably one of the biggest bulls out of everyone, but I'm also a realist, and I understand that right now the bigger problem and the bigger solution that needs to be had here is Trump's got to get these rates down. Plain and simple. For one, he's got a lot of debt, trillions of dollars on his table that they need to refinance. They need to cut down. Right? They need to get out of it. Guys, you're in a little bit of a gap here between 19,620s to 19,670s. Be extremely careful, okay? If you're trading this long. And if you are trading this long, you should be out. You should not be starting a long position in the middle of the range. There was a 20 SMA player on a 1 minute time frame. There was taking out, I just talked about it 2 minutes ago, 615s. Got to get over 615s before you can see any potential. You should be out. You should not be holding this thinking that you're going to catch a 300-point move to the upside. Okay? Just get money and get the heck out. But the thing is here is that until he gets these rates down, okay, until you see some of this pressure from tariffs going away. I mean, for right now, we have Canada coming out and talking every day as if, like they're trying to be like us, where every 35 seconds there's a news headline piece coming out from the Trump administration on Twitter or this, that, and the other. They're releasing things almost by the hour over there, that they're going to play hardball with the U.S. until they gain some respect. This is turning into an absolute pity party and a shit show, okay? It's turning into a pity party and an absolute shit show. Everyone wants this and that. Look, at the end of the day here, we all want to make money, right? If you don't care to look at the macros that are going on, you're doing yourself a disservice, because you're essentially trading blind. I'm going to tell you right now that a lot of these patterns, a lot of these setups that you're normally used to taking, and the time that it takes for them to set up and the time that it takes for them to hit take profit is not working, okay? Like, I can tell you that. It's like things are changing. Either your take profit's getting hit a lot faster. Either you're getting stopped out on your small, tiny stop loss on the NASDAQ a lot faster. Again, I'll be the first to tell you, you're running a stop loss on the NASDAQ of, 10 points or less. Good luck. Good luck. Even if you're trading a 1-to-1, 5 points for 5 points, 10 points for 10 points, you're probably getting stopped out probably 20 to 30% more here. Does that mean that your strategy doesn't work? No, it means that the environment that we're in right now is not calling for that type of risk management. There's two things: size down, open up the stop loss, or take your lumps, continue with that 1-to-1 and just try to escape, right? If you manage to knock out a trade or two, call it a day, right? Call it a day. Again, it's very frustrating because I look around sometimes on social media and I see people that have I had trouble? Again, I'm the first to say, have I had trouble since the month of February to now? Sure, I have had more trouble. Of course, I've had more trouble. You would be a fool to sit there and say that you have not had more trouble. Now, there might be some rocket scientists out there that say, well, I've been just making money crazy. Well, I'm going to tell you why you've been making money like crazy, because you don't know enough. And you're just shooting blind. You're like, market short, go short. Dead cat bounce, just bounce it, right? You don't know enough yet, where your brain is not comprehending like what's going on. So it's easy just to fire buttons when you just see big candles and you make money. The problem with that is you're gonna lose. You're not gonna be around that long. So you better make enough money between now and whenever this changes, that you learned a thing or two, or start wising up and learning a thing or two now, right? But of course, I mean, again, even the strategies with smaller take profits for me are down about 18% right now, meaning, the 78, 76% win rate is down to the low to mid 60% due to range. I've got to live with that. There's nothing I can do. But for the people that, they don't care, I don't care either if the market goes down or up. As a trader, we can make money on both sides. But long-term wise, you have to understand, and I take myself out of the equation, there's a lot of people maybe getting ready to retire, right? Imagine you're getting ready to retire. You have a 401k plan that your 401k, your IRA, your Roths, all this other stuff, your long-term portfolio has been chopped 20%, has been chopped 25%. You need that money maybe to retire, maybe to live on. These people are going to get absolutely crushed, because I don't believe that this is the end of the road here. Again, if I pull up a daily time frame chart, if I just really pull up the daily time frame, yeah, it looks disgusting. It looks like, oh, the market, can't go down any lower. It's still in bullish context, though, guys, from all the way from 2023. Are we back down to prices going back down into 2024? Sure. But just to take us down to prices from 2024 is not realistically that much. If you notice here, again, I got a lot of shit going on this chart. But if you notice this trend, this blue line here, there's 3 blue lines. This is a linear regression channel, okay? This linear regression channel is still upward sloping, which means that it's still in an overall uptrend. And again, 10 to 13% down on the NASDAQ is correction. Is it a bear market? No, but it's starting to get a little worrisome, as if almost they are walking us into a recession. Okay. And versus this administration versus the last administration, which is the Biden administration. Biden administration, we were in a small recession in the Biden administration. Okay. Markets were down anywhere between 20 and 32% at a period in time in the last administration. That's a fucking recession if you've ever seen it. Again, if you don't believe it, look at the prices of everything that has gone on. People are still talking about inflation, this and that. We're still recovering from the COVID, 2020. This is 5 years later. Right? So think about it. We have been in a little recession and the markets did recover. They did recover because we did put in new all-time highs. But the difference, what I'm saying, and why this might be a little bit more or feel a little bit more drastic, is because the previous administration never said officially that we were in a recession. We were technically in a recession on paper, but they never came forth and said it. This weekend, we had remarks from President Donald Trump, that said he is not taking a recession off the table this year in 2025. Guess what that's going to do? It's going to cause everyone to go into panic mode. If you're a bank, you're an institutional trader, you're a hedge fund, you're a retail investor with any two, pennies to rub together for a brain, you are not buying long right now. You are not buying long. You are not holding positions long. You are not starting your new position here. Now, again, you always want to be, if you're a long-term investor, you always want to be sprinkling in on these corrections, of course, but you're not just loading the boat here and saying, okay, it's time to buy and go long. There's a very big difference. There's a big difference. Dollar cost average, yes. Okay, on every single dip, no, of course not. Look at your macro chart, daily, weeklies, and you want to get them as close to firm supports as possible. But on a day in and day out basis, no, you're not just buying here because, oh, that's it, the market's going higher. Now, if you were to look at my 1 hour chart, right? Look at my 1 hour chart. Look at the same blue lines, the linear regression. Are they going upwards or are they going downwards now? These are going down. So we're in a clear downtrend. I mean, like, it doesn't take a rocket scientist to tell you that. You don't need these stupid linear regressions to tell you that we're in a visible downtrend. Let's see our 4 hour chart. Our 4 hour chart is still in an uptrend. So this has not, these linear regressions have not even flipped to a downtrend yet. What does that mean? There is still, and there could still be more room down. Okay. How much room down? A lot. Like there's like, we're halfway through this, right? We could be halfway through this. And here's the only benefit to Trump, right? Here's the only benefit to Trump in this type of situation, because he knows what he's doing business-wise, right? The markets will recover. They will recover with a vengeance. People will make money. People will become absolutely fucking rich during this cycle if you know how to play it. Okay? Most people do not know how to play this. I am not sure. I've done it once. Truly, I can say that I've been through one cycle like this, right? 2020, 2022, that I would consider that one cycle where, I was involved in a major pump and also a major correction. Before that, I've been in the market for 13 years, but I haven't really seen anything like that, right? Between 2020 and 2022. This feels similar to 2020, okay? Where the crash, I guess you could say, was more of a flash type crash where we go into a quick recession and then we come out of it, okay? We go into a quick recession and then we come out of it. And when we come out of it, we rally typically pretty hard. Where, like, I don't really think, in my opinion, I don't think we continue to sell like this for a year, because typical bear markets last 12 to 15 months. Okay. 12 to 15 months. Typical corrections last 3 to 4 months. Okay. That's based on the history of the stock market. That's not me pulling facts out of my ass, and anyone can Google it. Now, the benefit of this being what I feel and what I would hope, for the better of the economy, for the better of the average person, the better of the average investor, is I do hope this is more of a flash type of crash as we come down, 3.5% today. we get down extremely quickly, and the Fed and everyone is forced. They're forced to cut these rates. They're forced to turn that money printer back on. People are gonna say, well, isn't that the problem that got us in? Didn't we get into a problem last time when we were printing too much money? Yeah, but we need to refinance this debt. Okay, in order to refinance this debt, we need the rates to come down. In order for the rates to come down, assets like this need to come down, and they need to come down more. And I don't want to like be a fear monger, and I don't want to scare people, but because the average person, honestly, and even for, I don't even know how many people are on here, it could be one person, but for the average person that's on here, you don't even give a shit about what's going on with anything, because you're just worried about passing your prop from evaluation. You think that's the end of the road there. It's not. There's a lot more money to be made here. What I would be trying to do is focusing on loading up those apex evaluations or Top Step or whatever, Take Profit, whatever company you want to go with, in passing the shit out of them, going short with big size, invest a little bit of cash, get as many funded accounts as possible, learn how to trade the right way, make a ton of money from the prop firms, and start taking some of this money that you're making from the prop firms and start investing it into a little bit longer term plays and buying this fucking dip. Okay, because if it rallies, you're going to get rich. You're going to become rich. Now, it depends on how much money you're putting in. I'm not telling you if you invest $1,000 you're going to become rich, but if you put some money into this, you're going to make extremes amount of money. The problem, it's going to be a little fucking difficult here in the beginning, because it's very boring and it's very drawn out. But hopefully this doesn't last too long. That's my rant for the day, but I just think everyone needs to get on the same page and understand what the hell's going on. Technical analysis 101. You're not long biased if you're under the 50-day moving average. We lost the 50-day moving average here on the 20th of February. We're approaching about a month below the 50-day moving average. And now the longer we build below this 200-day moving average is not good, right? It's definitely not good. It's signaling to you walking into a recession. Because even if this market bounces all the way back up to 20,300, it changes nothing. It changes nothing. This market can bounce all the way to 21,000. It changes nothing. The pressure is still down. Where do I realistically want to see this? I want to see this get down and dirty fast. I want to see this get down. This is going to be a magnet to 19,300. Just timestamp that, come back to this video, this live stream, and make a comment and say, wow, 19,300 was hit. This is a magnet to 19,300, and this is probably a magnet down to 18,500. Mark those two prices out. Those are probably the two areas that we're coming down to before this even changes. Now, if this does get drawn out, sure, I'm not saying every single day we're going to sell off 700 points. You're going to get days where you're going to rally 500 points. But if this gets really drawn out, you could be looking at prices, much, much lower than that. I would say probably closer to 17,000 and a half. Between 17,000 and 17,500. That would take you into a full bear market, 20% plus from all-time highs. That would be a good reason for them to slash rates aggressively and get some things turned around. And then again, I've seen this bullshit so many times. It's like, you need a reason to drive the market down. Okay, so what started the drive down of this market? Tariffs, right? Ooh, right? Like tariffs. We're going to tax everyone just like they're taxing us. Okay, so what that says is, oh, prices are going to rise, right? Prices are going to rise. People start to get fearful. Okay. Then you have the lingering, stuff with the president from Ukraine and the Russia situation. You have all of this stuff going on, right? Okay, that only adds a little bit of gas to the fire, right? Doesn't really ignite the fire, but it just adds gas. And then you have prices coming down. Okay, so prices are coming down in the markets. What you need to see, we're coming down a little bit more here, guys. I'm gonna adjust this. This is our current low of day. I just want to see if that holds. What you need to see, gosh, this chart is nasty. you need to see when you start to hear the narrative like, oh, something with tariffs has been lifted completely, right? Or the talks with Canada and Mexico are all, everyone's in an agreement on something, right? Now it's going to be like, okay, anything with tariffs is not really that big of a deal, so a little bit of money starts getting put back into the market. When you start seeing the Fed slash rates, like if we go from 6% to 4.5%, from 6% to 4%, from 6% to mid threes, that's when you know this market is going to rally. If that happens, now again, that's my opinion, but I don't see them rallying this market, especially when Trump is trying to do all of this stuff and take care of this debt and has all these fucking magnificent plans that he's trying to do very, very quickly. It's too much too soon, right? It's too much too soon. Am I saying that this stuff doesn't need to get done and what he's doing is a bad thing? No. Long-term wise, I think what's happening right now is a good thing, right? Long-term wise, it's a good thing. But short-term wise, it's a pain in the ass. It's a pain in the ass to deal with it, from our standpoint, from our industry, because it's kind of hard to get a read, right? It's hard to get a read of the market. Markets are a little bit harder to trade due to the range. I'm not saying because of the direction. The direction is short. It's easy to find the shorts. It's not like I'm saying we can't find the setups. I'm saying it's harder to manage the setups because of the range. But if you start seeing, rate cuts, as soon as we start to see the rate cuts, you're going to see the market change. That's how it's going to play out. You're going to have some kind of easing on the tariffs situation, right? That'll be first probably. And then you will see the markets probably down. Again, keep track of this. I've seen this before. The market's probably going to be close to or over 20% down from all-time highs. Okay? These are things that need to happen. And then you're going to hear that we're going to cut rates. Now that works out with his plan of how he's going to refinance this debt, trillions of dollars. We're not going to refinance this debt at 6 or 7%. It doesn't make any sense. It doesn't make any sense. You can't rally the market from here if you're at all-time highs. You can't do it. How is he going to be a hero, right? How is he going to make the economy look great? How are you going to pump the market? Everyone always wants the market to pump, and we want to see new all-time highs. You want to just put money in and double your money and all this crap. How are you going to do that if you're at all-time highs? It doesn't make any sense, right? Can't just continue to go up forever. Again, you zoom out on the daily chart. Look at the daily chart prior to this dump. We've been going higher since 2023 with not any major correction. So what does that mean for you guys trading these prop firms? It means to get realistic here. Start making some money with the prop firms or quit. Like, go get a regular job and start putting money into long-term investments. You're going to make more money in the long run versus you sitting around fumbling the bag on these prop firms where you're still going to be here in 12 months when realistically all of the money that you've been investing into these prop firms, you should have just been buying these lows here and you would have tripled and quadrupled your money over the year. You're going to make more money. So get with the program, get with the coach, get with the community, buy a course, buy a book, watch a ton of YouTube videos, start trading, get with the program here and start making money and start wising up on what you need to do so you can actually make money that's going to benefit you for your future, or just go do something else and all of the money that you're buying evaluations and activation fees with. Instead of doing that, just become a long-term trader, where you double up your cash and you rotate it to something that's down, and then you double up your cash again and you rotate it. That's an easier business for you. You know what the problem is with that? People don't have money to do that. Well, I'm telling you how you can get money to do that. You can utilize the prop firms to get payouts so you can do that. It's just like in real estate. Do you want to own one retail or one real estate piece of property and collect positive cash flow on, or do you want to own 10 of them? I want to own 10 houses, right? I don't want just one. And what am I going to do with one? Nothing. Unless the house is completely paid off for in full in cash, and the housing market that you're in can yield a substantial rental rate, you're probably not going to make a full-time income having one rental property. You're just not going to do it. unless you have other sources of income coming in. And the other sources of income that you have coming in could be these prop firms. Again, stop treating these prop firms as if they're God. You know, stop following these people that are, you know, supposedly making $50,000-$100,000 a month trading prop firms. Again, for all of you people, there are big influencers out there that are pumping the shit out of these prop firms because they are making substantial amounts of money outside of it. So for you who gets very fixated on you're going to make $20,000, $50,000 a month trading prop firms, you probably have another thing coming, right? Like you have another thing coming. I'm not saying that's impossible, because it definitely is possible, but the average person is not going to do what needs to be done. What needs to be done is trading size that you can handle. What needs to be done is walking away when you have one winning trade of $300-$400 and protecting it. What you need to do is learn macro technical analysis, right? Where you should be leaning your bias to on a day in and day out basis based on what we did on the previous day and what we're doing on the weekly. Like, that's where you should be investing a lot of your time to learning how to do it. And again, I'm not saying prop firms is not the route. It's definitely an advantage, and it's definitely a tool because of the amount of leverage that you get, right? Again, a lot of people don't like to hear my bullshit and like to hear my rants because it's fucking boring, right? It's fucking boring, and everyone thinks that, well, why don't you just tell me the setup that's going to make money? You know what? Piss rocks. Go do something else. Go do something else, because, you know, if you want to sit there and watch someone push buttons and you think that you're going to learn how to trade, you're fucking not. I'm here to tell you that you're not, because you don't know what the hell's going on in their head. That's why. Like, I can tell you right now, why don't you just get long unless we just break the low of day? Well, because the low of day is sitting down here at 520 and you're talking about risking 50 points. Well, guess what? That's where you're at in the market. You don't like it, then there's nothing for you to do. Sit on your fucking hands. People don't get it. Right? You know? I could also tell you this. I mean, like what I never got that with people, you know, on YouTube, especially like people on other streams, because I'm not even a fucking streamer, and I don't think I would ever want to be one, because it's just too much bullshit. But if you look at this, okay, you want to go short once we break this trend line. If we break that trend line short and we confirm it, go short. That's your short position. That's your short position. You want to go long? Okay, find an opportunity to go long here and find an opportunity to use a stop. Well, what can that be? You know, well, we're over the 20 period moving average on a 1 minute time frame. So your stop loss can be below 19,548. You don't like it? Sorry, that setup's not for you. That's the range. Get long here. You know, click the button to buy long. Again, I'm not a financial advisor. I can't tell you what to do, but I'm saying that if I was a dumbass and I wanted to get long here, I'm going to get long here, and I'm going to use this reason why candle as my stop. You know, if I'm so itching to take a short position, I'm going to wait for this flag to get broken, and I'm going to wait for another candle to confirm it, and then I'm going to go short. Simple. I'm not waiting for no magic setup. I'm not waiting for the market gods and the algorithms to tell me shit. I'm just waiting for those two things to happen, right? Then let's see if they play out, and then forward test. Does it play out? What happened in this situation? Well, if you got in on this 20 SMA play on a 1 minute time frame, your entry price should have been a confirmation of 19,565. That went up to 19,583. That's 20 points. If you didn't make money on the 20 points, I'm sorry. I'm sorry, right? Now what do we do? Well, let's see if this breaks to the downside, okay? Let's see if it breaks to the downside. That's what we do. That's what people want. That's what people want. You want to be told what to do. It's an absolute fucking joke. Look at your 1 hour chart. Those of you guys who are watching from Evolution Traders, I've been speaking about the 1 hour chart for, I feel like, years now. Look at the 1 hour chart and you tell me if it's a good short setup or not. You know, that's all I'd be focusing on. Most people are too soft-skinned, to be honest. I mean, this is the money business here. You're going to make money, you're going to lose money. If you think you're gonna make money every single trade, you're mistaken. You don't get that, and just get it through your head. Get it through your head. You gotta be cutthroat. You gotta be cutthroat. You gotta be ruthless. You gotta have, you know, no filter, right? I have no filter when I talk. You know, I apologize if people don't like the way that I talk or I cuss or whatever. But guess what? At the end of the day, here I'm here to do one thing. I'm here to trade. I'm here to make money. You know, I could really give a shit less about you know, anything else. I got bills to pay. Here's a stupid setup. You do have the 2-in-1. So here's a 1 minute 20 SMA play. Here's a flag breakdown. If you take the first attempt on it, well, guess what? Get in, get green, get the heck out. If it breaks and snaps and closes back over the trend line, then you probably want to get out of the position, right? You can also just play the flag pattern, allow it to break the flag, and then confirm, and then you can go short. So there's two ways to kind of do it there. Again, if you're looking for something special with the cherry on top, there's nothing there. Like that's what you're waiting for. If you've already made money, let's say you're up $300, $400, $500, $600, I'd be sitting on your fucking hands. I wouldn't be doing anything. I don't care how good the setups looks. You're not going to see me put myself in a situation where I'm going to give back profits just due to the fact that I want to make more profits. That doesn't make sense. Do you that needs to start clicking for some people. Some people think that, well, here's another setup, I need to be involved. You don't have to be involved in shit, especially if you've already made money. Like, your whole job and your whole purpose of trading is to make money. So if you've already made money, why are you still sitting there trying to make more? Because you're a greedy son of a you-know-what. That's the only reason why. And that's probably the reason there's your short position. I would be out here. Like, in my opinion, I would be out. When it broke that trend line, okay, it broke the trend line and it confirmed, it went from a price of 19,541 down to 19,533. 5-6 points. I'm in and I'm out. Like, that's it. If you're waiting for a double verification, some people want to see so much confirmation, then you're getting in short below 32s or whatever the fucking low price is. That's it. That's it. 32s gets broken, you can try your attempt there as well. You know, whether it works. And again, this is what always gets me, because people will be like, well, what if it doesn't work? What if you get into your car and there's a drunk driver and they slam into the side of you? You don't know that, right? You don't know that. You're taking the risk. This is a risk business. Control the risk by maybe not drinking and driving. You're probably not going to crash, right? Control the risk by not trading 10 mini contracts short. Maybe you trade one. When is it going to start to click for you? I will tell you when it started to click for me. When I lost $39,000 my first fucking year. That's when it clicked. When I lost $39,000. I'm going to stop being an idiot, and I'm going to stop trying to get rich on every single trade, and I'm actually going to compound these small base hits. I'm going to stop thinking that I know everything on where the market could go because it should do this, and I'm just going to trade the facts. The facts is we've broken this downwards trend line. It's getting rejected at the trend line, and now it just confirmed. Does that make fucking sense? And not only did it just confirm, it went down 30 fucking points. Does anyone see that? For the sake of my sanity, I hope someone took that. We talked about it in real time prior to it even happening. And to the moron, well, did you take it? I did not take it because I'm already green. I'm not going to put myself in risk to potentially lose money if I'm already green. It doesn't make any sense. You can trade the way you want to trade and come back and talk to me in a year, and I'll trade the way I'm going to trade, and you can come back and talk to me in a year. Make sense? And if you don't see the markets that way, you're going to have a tough time. I really hope someone took that for the sake of my sanity. I don't even care if you made 1 point on it. I just hope you took the idea. Thank you. Thank you. Someone took it. And I hope for the sake that you actually got, because again, I'll be honest with you. Did I think that it was going to wick down 35 points? Absolutely not. I mean, it was a flash wick. I hope that when you took it, you got filled way the fuck down at the bottom, right? That way you made a bunch of money, you know? Hopefully, like, you got slippage to the good side, right? I don't know how many times we've taken trades and we get slipped to the negative side where it's like, what the hell? I was in profit 300 and I only made 220. What the heck? I wanted to stop out at $300 loss and I took a $380 loss because we got slipped. Hopefully you got slipped to the positive side. That would be fucking amazing. And if you were going long there because you thought the markets were going to bounce, you can use code DAnthony for 80% off of Apex evaluations. I'm not being a dick. I'm just being realistic. Because I know that there's people that wanted to be long there. That's a fact. Because if there wasn't, there would not be a market. There's always someone that wants to be long when someone wants to sell. And there's always someone who wants to sell when people are buying. That's the way the market works. Emotional sellers sell into technical buyers. Emotional buyers sell into technical sellers. Open marketplace. We can leave all of the market manipulation and this, that, and the other. Who cares, guys? You don't have enough money to participate in that anyway. So let's just try to get in on the right side of whatever the hell they're doing, right? Right now they're selling. So let's try to be involved with them selling. Manipulating it to the downside. Market doesn't need to be down anymore. Or some people feel the market needs to be down lower. Great, let's take advantage of it. Let's take advantage of it. And again, I'm gonna take this off now. This trend line, I don't need it anymore. That play already happened. Take this off as well. I'm gonna put a new one. If you look at the low of day, well, here was another setup, right? There's your low of day break. Boom. Your confirmation of the new low of day break would be down here. 19,484. Now, is this going to continue? I don't know, but you can definitely take it and you can figure it out if it is going to continue. What would be your stop loss? Your stop loss has to be a previous candle high. So on this trade, you're risking at least bare minimum 16.5, let's call it 17 points, bare minimum. Because you're not even gonna be able to see if the trade's going to work out by not giving it that. Because it doesn't even become technically broken until it closes, not a wick. Again, people get so scared on wicks. It doesn't technically get broken until you close over that previous candle. And if you did get wicked in and it does close over, guess what? That's the name of the game. You got to tip your hat to the market. But in a situation like that, I can only speak from my experiences. On a situation like this, where I know I'm chasing the market down through low of day, I know that there's a potential that I could get stopped out. Do I want to trade 2 or 3 mini contracts and give myself 17, 18 points risk? Probably not. Probably not. So I just start reversing the math. If I was to trade 5 micro contracts, how much am I going to lose? Let's call it 20 points. How much am I going to lose on 20 points? Right? $40 a micro contract. If I'm trading 4 of those contracts, I'm looking at around, $160 to $200. I'd be risking $200 on this trade, trading 5 micros and holding the damn thing as long as it's not technically broken to see if I can get 10, 15, 20 points to the downside. That's an idea. That's how you manage risk. You win some, you lose some, you stick to the process. The math should math and work out at the end of a series of trades. But for prop firms and for evaluations and for funded accounts, everyone wants to get all these winning trades in a row to happen right away so they can pass their evaluation, and so they can get to 8 days and they can get their payout, or 5 days and get their payout. But the truth is you're going to hit some snags along the road. It's how are you going to manage those snags and those speed bumps along the road so that you can still be in business long enough to see this through. That's all I'm saying. That's all I'm saying. We're down 745 points. We're down 3.68% on the NASDAQ 100. By golly. There's your confirmation. There's your confirmation. What an insane washout, huh? Jesus. I can adjust this one down to low of day now because there's a new low of day. And kind of going back to my point at the beginning of this stream, why is this market so difficult to trade? In my opinion, even though when you look in hindsight and it's like, well, you should have just sold, because this bounce that you got midway through this low of day break was 26 points. How many of you have a 26-point stop loss? Bare minimum. I don't think much of anyone does. And if you do, I commend you, and you're probably a little bit smarter than the average prop firm trader because you understand a little bit more about technicals. But I don't think the average prop firm trader is running a 25 to 35 point stop loss, right? That's what makes the move hard, because guess what? This is a perfect situation of look at what the hell just happened. If technically you stay in on that trade, that move is not technically damaged, and we already said that. Once we broke the low of day, we use a previous 5 minute or 1 minute candle as your stop. The trade was not technically damaged until we broke that high. It snapped back 26 points here on that green candle and then proceeded to go down another 15 points. Do you like? That's why it's hard, because people are like, well, I took the setup, but I got stopped out. And I'm going to look at the trade and be like, well, the trade should have won. Why'd you lose on it? Well, I had a 12-point stop loss. That's not the market's fault. That's your fault. Right? Get with the program. That's your fault. But I don't want to risk that much. Well, that's the market we're trading in right now, Pops. You know? That's the market we're trading in right now. So we either get down into those micros so you can be able to withstand that, or you stay out of the market. You stay out of the market. Right? I'm curious to hear someone else's thought process, because I hear this a lot. I want to know what you guys think. If you were just looking, and I'm not saying you were, but let's say if you were looking to trade this low of day breakdown, what would be your stop loss in terms of points? How much would you risk? I'm just curious. Like, please, somebody humor me. Please, somebody humor me to let me know that I'm not wasting my fucking time on here. Again, talking to other traders is what's going to help you. Because I love to hear, you know, because you guys might say something that might resonate with me as well, and there might be something that I can work into my game plan. But if you were looking to take a low of day breakdown, now I'm not saying don't come at me with, well, I would have wanted to see more confirmation. I don't want to hear from those people. I want to hear from the people that know that we're going down. You were going to take a scalp here through low of day. How much risk would you put on the table? How much risk would you put on the table? And be honest. Don't say what I said. Don't say previous 1 minute candle, unless that's truly your stop loss. Like, realistically, how many points are you guys putting on the table for a stop loss? On how much, what size, what kind of size we playing? I like that idea. What's your name? Dan Rick. I like that idea. How much size are we playing on that? MNQ 30 points, 9 contracts, 5 micros. Now here's a follow-up question. If you're risking, and I'll use your guys' 2 examples, 30 to 45 points, how many points take profit are you looking for? Because we could still be getting ourselves into trouble in these situations if, and I'll wait for your guys' answer. I put stop at in profit if we keep moving. I close at 50% of my total risk at a 1-to-1. See, I like that dynamicness of Dan Rick and Michael. Okay. Here's the thing, and I'll get to Jim in a minute. Here's the thing. Understanding that a wider stop loss in these conditions, even on micros, is necessary, right? Understanding that a wider stop loss, even on micros, is necessary. Here's my opinion. What I'm trying to do is I want to give myself enough room for this trade to work out, and I want to take profits when I got them. I don't care if it's negative risk to reward. I don't care if it's 50% of what I'm risking. I don't care if I take a losing trade. I hear this so much, but if you take a losing trade, it's going to take 3 trades to get back. I don't care. I'll walk away on 1 winning trade. I don't care. Like, because that's how stingy I am. That's how tight I am. If I go in with 5 micro contracts and I take 10 points, I'm taking $20 a micro contract. I'm taking $100, $125, $150. I'll fucking walk away on that. But that's not a lot of money. But I got 11 accounts right now that are all funded that I can go and trade. So I can make another $100 on 10 more setups, theoretically speaking. I'm not saying I'm going to win them all, but theoretically speaking, I have a potential to make $1,000 day there across the board, right? I don't need to sit there and push that one account to, $500 in the profit, $1,000 in the profit. So my opinion is, when you put on a trade idea, okay, if allowed to, if permitted, you definitely want to move your stop loss. If the move is going in your favor, you definitely want to try to close down that stop loss. Especially if we're opening up so wide, at least cutting it in half, at least going to break even, if we can, if we have the opportunity. Sometimes we don't have the opportunity. 2, if I start getting over 10 points, 15 points, 12 points, 13 points, I want to take profits. Because then and only then I can make a decision with a clear mind when I'm out of the trade if I still want to trade, right? Because it's very difficult to be asking yourself these questions and trying to manage, what should you do? And when you're in a trade. Your adrenaline's going too much. So you definitely need to close the trade. You need to lock in the profits, and then you need to analyze, what do I want to do from here, right? What do I want to do from here? Now, here's the other situation, like Jim's situation. Even if you've moved the stop loss, Jim, you've opened it up from what you're normally opening it up at. That's fine. You're still operating a very mechanical stop loss, okay? Which means that in this market, how we're trading right now, you still have the probability that you're going to get tagged, right? You're going to get tagged on a stop loss just due to the volatility, okay? In those situations, we need to be completely okay with being stopped out and allowing that to watch the chart continue to go in our favor. For example, on that particular trade that I'm talking about here through the low of day, I'm not saying that, you know, we have to take these type of trades, but what I'm saying is here is from that low of day breakdown, we got into the trade and it snapped back 24 points. Jim, you're going to be stopped out of that trade, okay? 100% of the time, you're going to be stopped out of the trade, and you're going to watch the trade go down about 25 to 30 points in your favor, but you're going to take a loss. Now, someone like Dan Rick with a 45-point stop loss and a 10 to 15 point take profit is going to be profitable. Make sense? Now, yes, someone like Dan Rick, if it stop loss gets tagged at 45 points, yeah, it's probably going to take them 3 trades to break even off that losing trade, but their win rate percentage might be a little bit higher, might allow them to walk away on the day after a good trade like that for 15, 20 points and make that decision with a clear head. Even someone like, who was it? Was it Michael who had the 30-point stop loss? Okay, well, we retraced 24 points. They would still be in that trade. And if they were looking for 50% of the 30 points, they're looking for 15 points take profit, they would have gotten tagged for a full take profit. Now, that's the only difference between someone who runs a more dynamic stop loss where their stop loss is opening up wide and they're adjusting where they're going to take profits. Maybe it's 50% of their stop loss. Maybe it's when it moves in their favor, 10 points, and they go to break even and let the rest ride. You know, that's dynamic because things are changing. Versus someone with a mechanical stop loss, yeah, it's easier to operate a mechanical stop loss because you fire the trade, it works or it doesn't. You get stopped out for 12 or you make 5 or you make 10 and you move along with your day. It's very mechanical. What I see chewing people up is people with a mechanical stop loss who continue to fire trades when it's not working, right? If you just keep firing trades and you keep taking 12-point stop loss, 12-point stop loss, 12-point stop loss, 12-point stop loss, and you're not walking away, you're not understanding that today's volatility is too much for your 12-point stop loss, and you're not going to move that 12-point stop loss, which I'm not recommending that you have to move stop loss. I'm not sitting here and saying that, hey, Jim, if you want to be successful in the markets, you got to go to a 25-point stop loss. I'm not saying that. You can definitely keep your 12-point stop loss. What I'm saying is that if the current day's volatility is too much for your 12-point stop loss, you got to walk away, right? That's when you need to bring in some type of other indicator to kind of start forward testing and getting some hard data on to know when you should be taking trades and when you shouldn't. Example, ATR. If ATR is over, let's say 22 points on a 1-minute time frame, and you notice that 80% of the time that you take a trade with a 12-point stop loss when volatility is over 20, that you get tagged out 70% of the time, guess what? You cannot take trades. I don't care how good it looks if the ATR is over 20. Make sense? Done. Easy, simple solution. Done. Right? Maybe the sweet spot for you on a 1-minute time frame is between 10 and 14 points. If it's between 10 and 14 points, we can run a 12-point stop loss and we can fire away trades all day long because our win rate percentage is going to naturally go up. So for the people who run smaller stop losses because they want to risk less money, just understand that if you're getting tagged out. It's necessarily not that you're trading bad. It's just that the market conditions are not supporting what you're comfortable in risking. To make it easy, I use a value. I have a stop loss of 450, but close at 200. If positive, then we'll hold. Then I will hold to 400, but it depends on how quickly we have a pullback. Then I take anything. Yeah, I operate almost on a same kind of dynamic like that. My average, my risk might be dollar amount too, between $400 and $500. I'm looking for 150, $250 a trade, and I will have no problem closing out the trade early if I feel that it's not working out, and I have no problem holding it if I feel like the momentum is there, right? I definitely want to try to squeeze out as much as I can from the trade. 20 play would have worked out beautifully, yes. On that particular 20 play, let's give an example, right? Let's walk this through in real time. Let's walk this through in real time. Like let's back test it, I guess, in real time. Let's back test this. Shit. This 20 play had a range of 12.5 points. Okay. So automatically, I know that I'm going to risk at least 13 to 14 points. At least. Okay. I get in on the confirmation. Now I can do one of two things. I can say I'm risking 13 to 14 points. Okay. A 1-to-1, I need at least that to get TP. Okay. You can do that. Another way that I like to do, if I'm going to risk 13 to 14 points, I'll say that if I get 6 to 8 points, I'll take profit. Make sense? That's how I'll run it. Every single time. Now, depending on the outcome of what happens in this type of situation, depends on whether I continue to trade. Now, it's very easy for people to, okay, you made money on this trade, right? You look for the next one. Next one sets up, let's say here in this situation, let's say we close below the 20. Let's say that. And then you're like, okay, cool, I'm going to take another one. And then this trade loses and you lose 18 points. Well, now you've given back profits from your previous trade. And now what it does is it scrambles you all around. It scrambles you because now you went up money, now you're down money. Now it's just like, okay, now I need to get it back, right? You've got to get to a situation, you've got to get to a point where you're very content maybe taking one or two of these trades when they look very ideal. Like here's another one. Like when they look super clean, like this one got rejected at the 50 and 20, why not pressure down, right? Got rejected at the 50 and 20, why not pressure down, right? We put in a new low of day, and we've reclaimed the 20, well, why not play this into the 50, right? But you cannot sit here and take this short, take this long, take this short, take this long, take this long, like take this short would have been stopped out. Like you can't sit there and just think this is a strategy that it works a lot. I can just punch buttons all day. No. You have to be mindful that you are going to run into a losing probability trade. You've got to get to a point where you're comfortable in your head. Making X amount of dollars is calling for you to walk away. Very curious on those of you guys who are playing micros. What is a dollar amount that you are completely content clicking the button on your monitor, turning it off to a black screen, getting your butt up off the chair and doing something else? What is that dollar amount? What is that dollar amount you're content with walking away at? Just to kind of, what's going on here, right? the 1 hour chart is setting up a hammer candle, telling us maybe we're getting a little bit of a bounce. The 1 minute chart is consistently putting in lower highs. We have bottomed out here at 19,450. I could potentially see a shoulder, a head, and maybe another shoulder here. If we dip down below this 20, I would avoid taking the 20 play short here in this potential situation, just due to the fact that the 1 hour candle is trying to set up a dead cat bounce, and we potentially are setting up an inverse head and shoulders with a neckline somewhere around there, around 550 to 575. So I would look for this to drop, but put in a higher low, okay? That's what I would personally be looking at. I would definitely mark out the low of day, because if we do lose the low of day, then that's completely invalid, right? So let's see here how that plays out. Again, I'm forward testing in real time every single fucking day, right? Every single day. Like, I want to see, does it work? Here's a 1 minute 20 SMA play. What's your risk? If you're gambling, okay, if you're gambling on this, you're looking at a potential 25-point stop loss. Because if it like that's the problem. And that's why I keep telling people, in a range like this, it's so hard to even manage trades, even though technically, yeah, just get short, right? It's 25 points that you even have to bare minimum start off with. So what are we looking for? At least we're looking for at least 10 to 12 points, right? At least 10 to 12 points bare minimum. So someone on a 20 play here should be entered and triggered in short, and you need at least 10 points. So if you're in this trade, 19,497. Now again, it doesn't you don't have to get 10 points. You could close it at 5. But, you know, for the theory, right? For the theory, I mean, you want to get something a little more off of it, right? So if you're in on this trade, 19,497, we're currently trading at 494. We've put in lows of 492, right? I mean, we've got some work to do. We need to get down at least into 87. And then there it is. You should be out. There it is. That is what you should do. You should get in and then get out. That's it. I'm not saying hold it, you got to get the low of day break. No. You were risking 23 points on that trade, 24 points on that trade. You got into the trade. Okay, let's at least look for half of it. So if we're going to get in and we're going to risk 24 points, let's at least get 10 to 12 points. And you just got it right there. Makes sense? That's how I play. Again, I can only speak to how I trade. You know, if I'm in below 97s, right? If I'm in below 97s and we drop down to 77, well, gosh damn it, that was 20 points. Now, it was a flash, like how it went down 20 points. But I mean, like, we can see it. We're 5 points, 6 points, 7 points, 12 points in profit. Okay, I got to get out of this trade. Michael, $500. Okay. So $500, and your average winning trade dollar amount is what? Like, if stars align and you enter a trade and everything works out perfectly, what is your average winning trade? $200. So realistically, Michael, based on those numbers, you hit 2 trades in a row, you can pretty much call it a day, right? The number's 500, but hey, we went 2 for 2 on the day. My mentality, again, operate how you want. My mentality, shit, I just went 2 for 2. I'm 400. I would love to make 500, but why risk it, right? Because if I do lose, I might, you know, the trade goes completely against me. I might give back 250. I might give back 300, right? So I would operate on a rule set where if I have 2 back-to-back winning trades, I'm done, right? I'm done. Now here's what I want people to keep in mind. If you guys are scraping out $40 to $50 winners and you're telling yourself, well, I'm okay if I make $500 today walking away, guys, you need about 10 trades. that all need to win. What do you think the probability of you winning 10 trades in a row are going to be? Probably slim to none, right? So the way I would set my day up, the way I would set my system up is set it up in a way where when you trade, if you win a trade or two, it's pretty damn close to that daily goal that you have in your head. Because that daily goal that you have in your head is the biggest thing that screws traders up. They want to make this made up imaginary number, okay? And that is what subconsciously and psychologically will make them okay with stopping trading, because again, remember, the biggest problem that people have is over trading, right? So you have this fictitious number in your head that doesn't really mean anything, but other than psychologically. So if you're taking trades where you're making 40 to 50 bucks and you have a number of 500, I'm using Michael's example, you're going to need like 8 to 12 trades bare minimum before you can walk away. You know what that's going to create you to do is overtrade. You're opening the door to the overtrade freaking demon to come in because you need so many trades, right? You need to set up your system in a way where when you find that picture perfect setup, you're not looking for 20 fucking plus trades a day. When you find your picture perfect setup that aligns all the stars together in order for you to take a trade, if you take that trade and you win again, you're pretty much done, right? So figure out your position sizing. The same thing goes for the losses side. If you take two losing trades back to back, it's got to be a dollar amount where you're like, okay, I cannot trade anymore because I will, I'm gonna give back too much. I'm gonna potentially blow an account. So, and ultimately, as the account balance starts to grow, as your experience level starts to grow, if you can get down into where you're putting on size to where if you pop that one trade, you're one and done, or you lose that trade, you're done, is probably going to be the best for you. Allowing yourself to take one, maybe two trades a day on the size makes it really worth it. That's the sweet spot you probably want to get to. And there's many ways to get to that sweet spot. It could be opening up targets. It could be, adding size. It could be doing a lot of things, but the market is down damn near 4% today, guys. This is absolutely insane. Just due to the severity and how fast it's dropping. There's literally not a buyer in sight. These green candles, these bounces, this is nothing. This is fucking bullshit. This is sellers sneezing is what it is. It's like, oh, okay, let me grab a tissue and sneeze really quick. Oh, let me throw the tissue paper away and let me kind of go, let me kind of go back to my selling. Anything like, to be honest, Danrick, anything between 150 and 300 bucks. Like, I've taken trades sometimes where I made one trade and it's $165. I'll just stop trading. There's been instances where I've taken 2 and 3 trades and made 300 bucks. I'll just stop trading. And there has been days, they're outlier days, meaning I don't expect them and I don't look for them. There's been outlier days where I'll make $600, $700, $800 on a 50K account. I've taken a lot more than 2 or 3 trades, of course, 7, 8 trades, but those are outlier days. I'm really feeling confident. The market's really moving what I want for any account. Yeah, I only run $50,000 accounts. For me, with prop firms, my whole goal, I want to log green days. I don't care what the dollar amount is. Now, I'm not going to walk away with 40 bucks. It's not worth it. But like, if I'm over $150, $200, I'll stop. I'll feel very, very inclined to stop. $300 is a fucking damn good sweet spot. I'll stop. $350, I'll stop. Like, I just want to log a green day and walk away. Now, a lot of times it doesn't mean that I'm done trading. I've got 11 funded. I could definitely pop down in another funded account and take another setup somewhere else. But for one account, I don't copy trade either. Again, I like, everything is individual. So You know, truthfully speaking, I can take 11 trades and not risk blowing any one account. Even on my worst trade, it'll be a $500 loss, and that account will be down $500. But there's 10 more accounts to support it, right? Am I saying that I've never blown accounts? Pfft, of course I've blown accounts, right? I'm human. Like I have done stupid things in the past. The only difference is that experience has like allowed me to like catch myself when I'm being a freaking moron faster. And in the beginning, years ago, I didn't catch myself being a moron faster. I would just run my head into the wall a million times because I thought I was going to change something. And it didn't. It just made my head hurt. So realistically, I try to plan my 50K accounts as if I can take a payout in 30 to 45 days on one account of at least $1,500 to $2,000, I'm completely content. Because the prop firms is not my only source of income. My number one source of income is trading stocks and options. Like for example, today we shorted Tesla for $3,000, right? The move wasn't that hard. Just get short pretty much through pre-market lows. I went short through the opening 30-minute candle. So that helps, right? I mean, again, that helps. If trading prop firms was my only source of income, I would probably feel more stressed to trade more or to make $500 a day minimum or to make $800 a day minimum. But I also know that would probably cause me to want to overtrade when things aren't going my way. The only thing that is allowing me to walk away with $200 or $280 is I don't really care how much money that account makes. All I really care about is, can I close the day green? That's all I care about. I don't care how much the dollar amount is, because I know for every day that gets logged green is one day closer to requesting a payout. For every day that I can try to manage $300, $400 red day, I'm only one day back. That it's not that much. Like, what are the odds, truthfully, that you're going to lose 10 days in a row? Probably slim to none. Again, if you've lost 10 days in a row, we have bigger problems. Does anyone remember losing 10 days in a row? Can you remember losing 10 days in a row? Or 8 days in a row? And I don't mean losing trades. I mean closing a red day 8 to 10 days in a row. At this rate, the market fucking goes down 3% a day. We might be getting close to being 20% plus down for the entire market in a week. I hope that this goes fast, to be honest. Was anyone around? Was anyone around during 2020? We started selling off in about January. By February, we really sold off. But by April, it's like 6th or 7th. I remember it to a T. Everyone thought the world was going to fucking end because, closures and COVID pandemic and this, that, and the other. And it was around the first week of April, March, April. Yeah. It was about the first week of April. The market just suddenly stopped going down and just proceeded to go up for about 9 to 10 months straight. Does anyone remember that? Was anyone around trading back then? I mean, that's wild. That was a wild time, right? It kind of feels similar. It kind of feels similar to where we are going down at a rapid pace where you can almost expect that a rubber band effect. And I'm not saying, we're going to be at all-time highs in a week. That's not what I'm saying, but we can almost see a rubber band effect to where one day we just stop going down, and that was the low. Now, when that comes, I don't know. In my opinion, I think that we need to get down below 20%, but the faster we get there, like, I'm all for just the market just continue to just sell. The worst corrections and the worst bear markets that make things extremely more difficult to trade is when these things drag their asses for 9 to 12, 9 to 13 months, where it's like 2 days down, 1 day back up, 1 day down, inside bar day, 1 day up, and then give back 2 days. I don't like those markets because it's like it's just slowly grinding you. Like, I would rather it just keep flushing out and flushing out and flushing out, because again, history tells you greater than 20%, between 20 and 35%, 20 and 30%. I think the market has changed. I think the days of bear markets where they're trading at 30 to 35% down are over. But greater than 20 to 30%, I think we're more in that range. So what I'm saying is the faster we get down 20%, the faster that we can see probably some light at the end of this tunnel. And let's be honest, you can definitely make money very quickly short. I think we all kind of see that, right? We've all heard the narrative, staircase up, elevator down. But the sun shines so much fucking brighter when the market's in a raging bull market. People just seem to be a lot more happy when we're in a bull market frenzy. I know I am. The bear markets, these corrections, they absolutely irritate the hell out of me because of the volatility. The volatility is so high. Everyone wants volatility until volatility slaps you in the face. And I just know that there's a big potential. I have been aggressively loading long-term portfolio for the better half of 3.5 weeks. And I'm fucking down. Like, I'm down pretty good, So, and I'm still adding, right? This sell-off, I've seen this before. This does not, worry me. This does not concern me. New low of day here. I mean, just keep going at this point. Let's go, baby. I mean, let's just hit fucking breaker today, right? What is breaker? 1,000 points? We're at 800. We're at 800 points now. Like, let's just hit breaker today. Flash crash this son of a bitch. I will say this though. Again, speaking to some of like my older buddies who have been around the markets for like a long time, like much longer than me, decades longer than me. You get an 800 point move down. I mean, people on Wall Street would have been jumping out of the 30th story building 30 years ago. Like a 4% down move in the markets, 800 points, damn near, like, let's just round it, damn near 1,000 points in one day. I mean, you were jumping out of the window. Your investments were torched, right? Your investments were torched. Imagine people who were reallocating going into 2025, taking some profits at the end of 2024, and now reallocating funds to a long-term portfolio for 2025. You got absolutely smoked, brother. Absolutely smoked, right? Like, what is, like, the big one that they track, old money will track the YM. Fucking YM is down $750 today. 750 points. We're almost down 1,000% or 1,000 points today on the Dow. The Dow is down at its daily 200-day moving average, and it's lost it. We just lost the 200-day moving average today. Very significant. This is very significant. Still overall uptrend, of course. but it's very, very close. So we are getting close. We are getting close, which is, again, I hate to harp on it, but I believe this is going to be more of a fast rubber band to the recovery process than a longer drawn out process. Again, if you have been trading for the better half of 5 years, you remember 2022? Consider trading MGC. Why? Why should I consider trading MGC? No, I'm perfectly okay with trading the NASDAQ. I'm not going to learn a new asset class. I've traded gold before, but I don't have a reason to. You know, the narrative's simple. Just keep fucking shorting this market until they turn it around. You know, I mean, GC's barely starting its pullback right now as well, but again, like, what's the difference here? What's the difference, right? I could trade gold short, or I could trade, NASDAQ short. It doesn't really matter. But the thing is this, or gold is just lagging, because again, you have to think about it. In any pullback, in any correction, safer money is going to go into safer asset classes. So because gold is not pulling back as significant as, let's say, the Dow or especially the NASDAQ will always lead. NASDAQ, SPY, and the YM. You can say, well, you could just be going long on gold, or it's not pulling back as much. It's just because it's it's going to be one of the last asset classes. Money is going to flow into gold as a safe haven, but like in a true correction and bear market, nothing is going to be saved here. Gold is barely starting to kick down here. Like it's barely starting its wave. When the NASDAQ starts to recover and the S&P starts to recover and the Dow starts to cover, guess what's going to be trading down in the fucking dumps? It's everyone who was going long on gold is going to be getting absolutely wrecked. So it again, sure, you can definitely trade gold if you don't do well in a correction market or a sell-sided market. You can definitely trade gold because it's gonna be lagging, right? The money's gonna flow from these much more riskier assets to a more safe haven, right? So, but I mean, I don't trade gold though. I have people in my room that trade gold, but I've always traded tech. It's just what I do. Do I love it? Do I love tech? Does it irritate me sometimes? Sure, but it's my baby. Like we just, individual traders that trade certain markets, you just learn your market, right? And once you learn your market, you do pretty well. Like right now, I mean, again, I've been sell-sided bias for the better half of 3 weeks since we lost a 50-day moving average. It's just once you learn your markets, you just kind of stay with it. Now, again, I harp on it because I just I don't like it, but it's not that I won't trade it. I'll trade it short. I just hate when we do this. More so for the fact that it's bad for my long terms, right? My long portfolio gets absolutely destroyed during times like these. It's like I got to put more money in. So what it forces me to do is want to extract more money from day trading so I can put more money into my portfolio at these discounts, which we still need to discount more though. Look at the SPY. 560 from 613, but it's not that much though yet. It feels worse than what it is. I mean, look at the SPY. Guys, look at the SPY on the right-hand side of my screen. I mean, is this surprising that like we've pulled back? Look at the uptrend we've been on. That's why I'm saying it's easier to make money in a raging bull market. You get pullbacks a little bit in these bull markets, but I mean, you go multiple weeks of green. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I mean, you go on 3 to 4 month runs before you have a little bit of a month downturn. You go on multiple month runs, you have a 3 week downturn. Multiple month runs before 4 week pullback. Multiple month runs before 1 week of red. Like, it's much easier to make money in a raging bull market than this volatility. I mean, we've had 4 back to back to back to back weeks of just constant selling. Volatility starts to expand, makes it hard. We're barely losing our weekly 50-day moving average here. Huh. But I mean, again, even if you look at the pullbacks we've had, it's like this pullback. Once we lost the 50-day moving average, we went on 1, 2, 3, 4 weeks trading below the 50-day moving average before we just found a low and we started to rise multiple months. If we look at where we're at now on the next one, we lost a 50-day moving average and then we proceeded to bounce and chop around for a month, and then we just had this major just gap down here for 1, 2, 3 weeks. But the overall took 2.5 months, and then we found a multiple month run, closed below the 50-day moving average here, only traded below it for 1 week, and then we had a multiple month run. So from the last really, pullback below the 50-day moving average on the S&Ps was all the way back here in the beginning of September of 2024, but we only spent 1, 2, 3, 4 weeks trickling below and right at the 50-day moving average before going on a run from the month of October all the way until January. We topped out here in February. So from October to February, what is that, 4 months? And now, if you look at it, I mean, we're spending multiple days now, like below this 50-day moving average. It's a little different than this time here. Like we were in consolidation in December, where we were back and forth with this 50-day moving average, but we weren't building. Like, we weren't building below the 50. We were basically just trading at it and then going right below it, and then at it and then right below it. And we've been consolidating for the better half of about 2.5, almost 3 months without really making new highs, right? So when you have a 2-3 month consolidation where you have stopped making new highs, but you weren't making new lows, guess what's going to happen when you finally do break out or break down, which in this case we've broken down? You're going to get a very aggressive sell cycle. Mm-mm-mm. Mm-mm-mm. Wow. Question, you guys like trading a sell cycle or a bull cycle? And also, have you guys ever, how many of you guys have truly been a part of a bear market or a major correction? I got a lot of buddies who just, they essentially right now until we like reclaim, or in this case until we reclaim the 200-day moving average. I mean, truthfully speaking, on a daily, but until we reclaim the 50-day moving average on a daily time frame, they just they take a hike. They take a hike. Like, you basically hedging your you're hedging your longs, right? Your long portfolio, you're hedging them with outdated puts, and you basically take a hike for a couple months, and they make really really good money. I mean, the inexperienced trader believes that they need to show up every single day and just be punching and hammering keys. And when in fact you make so much more money trading less and getting a part of that macro move than you do of like showing up every day and trying to hammer out fucking 20,000 trades a day. It just doesn't make any sense. But yeah, I got a buddy who's, taking a lot less trades. They're completely hedged short right now, um, below that 50-day moving average. And they're just short to the gills. And that's how they are hedging their long-term portfolio. And when we find, where it looks like we're going to find some support and finally start to bounce, or you see something macro-wise that is changing, they will close those shorts and roll a lot of that money into their long-term portfolio and then cash out the rest. And it's like essentially you didn't lose any money during the time. Again, that's why people like I trade options, naked calls and puts, but a lot of times people get into that because of the leverage is so big on options. But options were truly created to hedge an options contract is a hedge. So one options contract, in theory, controls 100 shares. So if you own 1,000 shares of something, you want to be hedged, maybe 4 to 6 contracts, right? 4 to 600 shares the other way. It was created as a hedge. But like let's say you had $100,000 in a portfolio, right? And as soon as we lost a 50-day moving average, you hedged short triple Qs, and you bought 3 or 4 month out expirations. You would be up huge right now. Huge. If you're not an active day trader, I'm speaking like I'm an active day trader. I'm not really hedged short, but I'm an active day trader to where I'm shorting the markets on a day in and day out basis. But if you're not an active day trader, maybe you don't have the time or something like that. Yeah, you're buying leaps, right? You're buying leaps, and you're hedging short, right? And there should be no reason why you would have gotten out of this. And I'll kind of give you like the idea, right? I'll give you the idea of when that kind of comes in play, right? So what you're realistically looking at on a daily chart is, if you notice the highs that we had, right? These highs that we had back here in December, we kind of had these highs. We came down and tested the 50-day once, bounced, dead cat. We're putting these lower highs. We've lost the 50-day back here in January, and then we reclaimed. Once we reclaimed the 50-day moving average, and there was no intentions, no real will to push a new high of day here, that on this last sell cycle here, once you get down below and you start closing below the daily 50-day moving average, you hedge. You get those outdated puts, and you're essentially putting a stop loss here, right? Because what invalidates your thesis, your theory, that would invalidate your theory that the market is going higher, right? You don't want to be holding leaps or holding 3-4 month expirations short if we're trading damn near all-time highs. But when you got below the 50-day moving average, you're basically just holding short, and you would get out of that position if, let's say, you closed back over the 50-day moving average. Yeah, you just get out of it, right? You just, okay, it was a hedge in case this happened. You would get out of it. But in theory, you're holding it. And you could have taken some profits down here at the 200-day moving average and then maybe held some runners. And now you're just realistically you're just kind of like in hold mode here. You're, you know, a lot of different ways to play this market right now. This market, again, I don't want it to come off as if I'm harping on the market, but there's a lot of, I get excited and I get very like in work mode in this type of environment because there's a lot of opportunities that are being created. The opportunities that are being created here is going to be phenomenal. It's like we need to be positioned. We need to have we need to have dry powder. So how are we going to get extra cash? We need extra cash right now. If you're trading prop firms, we got to get these payouts, guys. We've got to get these payouts. We've got to get some money on the sidelines. We've got to be ready to go. You know, we don't want to be fumbling this year. Like, let's say, you know, we have another 4, 5, 6 months of just bullshit market. We don't want to be fumbling the bag and failing these accounts and never making any money. And then it's like we're watching the market just scream to the upside and we're still in the same spot. We've got to make some money. We can make big money here in these type of environments. Is how are we going to situate ourselves? How are we going to organize this? Guys, let's hit the fucking breaker today. 820 points to the downside. Imagine the social media king or queen who has been short, you know, fucking 500 points, 600 points, right? I'm sure there's somebody out there today that is going to post up a phenomenal gain of $50,000 because they just were short all fucking day. I mean, at this point, let's just run it. Let's just run it at this point in time because you're not getting any buyers. I mean, who would want to buy the market right now? Right? Like, would you trust just buying it right now and just in the middle of just a free fall? I mean, the sellers are just building up so much, you know. It's insane. It's insane. Crypto markets are getting absolutely destroyed right now as well. And Bitcoin's at 78,000 right now. Ethereum at 1,900. Jesus. Solana at 117. Wow. Wow. A lot of buying opportunities here. A lot of potential. Timing is also everything too. You don't want to like load the boat like too early, right? You don't want to load the boat too early because if you still see another 10 to 15% correction from here, but I mean, wow. Solana is down 40% this month. Bitcoin is down 19% this month. It's still up 8% year over year. Typical Bitcoin corrections might be 30 to 50%, so could be halfway through. I think Bitcoin probably comes back into mid 60s to low 70s before this is over. I'm trying to time this market. Again, you'll never time the market perfectly, but I'm trying to time it. When I say time, I want to time it within the month. Like I want to be right on the month where we're putting in lows, right? Do I think that March is that month, or do I think that April is that month? That is what I'm wrestling with right now. I want to say that it's going to be in April or May. I gotta keep them doing the math. So NASDAQ, what I'm really waiting for is greater than 20% and then start aggressively buying. I've been sprinkling in. I'm adding things like NVIDIA. I'm adding things like AMD. I'm adding things like Tesla. Again, I trade tech, so you know my portfolio is gonna be tech heavy, right? So if the Nasdaq takes a big hit, then yes, my portfolio takes a big hit. But again, this is like a portfolio where I'm not looking at the outcome for the next 15 to 20 years. I'm looking at returns for 12 to 24 months. Like that's how I play my portfolio, and then things will get rotated, right? So I will take profits, I will rotate into other names, I will buy back in. I kind of play that type of play. Look at the market, get just a nasty 1 minute candle pop. And I'm telling you, right, like don't be surprised. I'm not saying this candle, but it's gonna get to a day where one day you just pop and then it's like, what the hell just happened? The market just doesn't go back down. But anyways, so we're trading at 470. We traded lows of 471, 471, and we had highs of 540. So 540 minus 471 is 69. So we've dropped 70 points on the Qs. So in order for us to see a 20-point decline or a 20% decline on the Qs, which I think we're going to get to, that's my opinion, right? I think we're going to get down at least 20% or greater. 20% would put us, and if we don't, then hey, I've sprinkled in some fucking money, and again, if we just go up from here, like today was the last day and you just go up from here, then fine. But I'd like to load more. I'm gonna look at what that looks like. So if I'm gonna take all this crap off the screen. So if we decline 20% from all-time highs of 540, would be about a 110-point drop. So that would take us into at least 440. Let's call it 430. That would be here. So would this make sense? Let's put it there. That would be a 20% bear market correction. Now, that would just be 20%. Again, you can definitely dip lower. So if I was to do, what is 30%? That'd be 162 points. So that would take us all the way into like 380. $370. This would be 30%. And if you zoom out, right, what does that look like? Let's actually put it on the weekly chart. What does that look like? So think about this, guys. Think about this. I put these lines on the screen before I looked at this weekly chart, right? A 30% bear market would take us exactly to the weekly 200 day, the 200 SMA. 20% would take us to the 100 simple moving average. Now, if you overshoot it and land somewhere in between, where would we find support? Maybe this dip going back to April of 2024, maybe this dip here, and then other support would be here, this resistance in July. So between this range here. So what I'm actually going to do is I'm going to leave this on my chart, and I would love to come back and circle around to this. It actually takes us down 30%, to be honest. I'm going to leave this range on my chart, and I'm going to really monitor this over the course of the month for sure. But these could be potential landing spots. If we get, and the reason I'm leaving it there is because if we get down into these ranges, I want to be a buyer here at 430s. And if we don't get there, fine. Great. Let's fucking rally from here, and then we can start making money faster. But if we get down into 430s, I want to be aggressive buyer there. I want to be a more aggressive buyer in this gray box. And it's like last call is here at 379, which that would be last call. I mean, we start trading below 370s. Jesus, I mean, look out. There's something crazy. There's a fucking World War III going on or something. So how fast can we get down here, realistically? How fast can we get down here? Right? We're losing 12 points a day here, 9 points a day here. We're losing an average. On an average red day, we're losing about, or actually, I could just fucking look at it. We're losing an average of 11 points on a red day. Now, today we're down 18 points on the Qs. Could you imagine? 18 points on the Qs is significant. Like, that's very, very significant. But if we lose an average of 11 points, and we need to get down at least, I would say at least another 40. We could be anywhere between a week. And again, remind you, you're going to have green days in here. Like, look at, we had a green day here. 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 We're not going higher. We just have a pause, right? So we're going to have green days if we continue to go down. So if we're averaging 11 points on a red day, and I want to see this market get down at least 40 points, that means 4 red days in a row. But because we're going to have green in between, let me give the market 2 days. That could be a potential of 6 days. So 6 to 7 days between March the 10th, which is today, and March the 20th, let's call it. We could potentially be trading here in the next 10 days. Now, I'm going to expect at 420, 430, I'm going to expect some type of bounce here, because this bounce here is probably going to try to come right back up into that range. You know, it's going to try to come back up into that range before eventually going down, because you notice here, guys, on the sell-off, we haven't put in a dead cat bounce where you put in a lower high yet, right? We haven't put in that lower high, then consolidate, and then come back down. We haven't even done that yet. So this is leg one, and normal pullbacks are 2-legged pullbacks. So you have leg one, right? And then you have leg two. And then typically that second leg pullback is the explosion back up to the upside, and that's the recovery. So if we're still on leg one, that means that the first dead cat bounce can go to 500. The first dead cat bounce can go to 515. And then we lose it. But Friday's bounce didn't do anything. What about Friday's bounce? Give me more context. What about Friday's bounce? I'm sure I have an opinion, but I just need more context about what about Friday's bounce. I'm open to questions about market dynamics, market structure. I love talking about this shit because it's all about trying to find a plan, right? Trying to find a plan to make more money. So I'm open. So yeah, so again, yeah, Friday's bounce is a dead cat bounce. And that's exactly what it was. So Friday, I'm looking at the cues, right, to kind of put the numbers into more, for me, I put it into more like understandable terms. So Friday's bounce, we bounced 12 points, right? We bounced $12 on the cues, which is the NASDAQ 100. So we bounced $12 on the cues. But here's the thing about that dead cat bounce is today we failed to get back over Friday's high, and we failed to reclaim the 200-day moving average. So what actually happened here was that was nothing more than a dead cat bounce that got rejected at supply for a continuation lower. So when I'm saying that we haven't had like a dead cat bounce, you need to see more than that. Like that's nothing, right? We're putting in an average of $12 on a red day. This dead cat bounce was $12. It did nothing. A dead cat bounce is a bounce that gets over a previous day's channel. So Friday's dead cat bounce was well below Thursday's channel, right? So it's not a dead cat. It's not like a true dead cat bounce would be like this, right? You know, where you're going up and then it was a failed move to go to the high side and then you break down lower. This is just like it was like a 1 day dead cat bounce, but it's not really like anything of significant. We haven't had a true like dead cat bounce. It was just, I guess it's what I'm trying to say to make things like simple. Like imagine running a marathon, right? We're running a marathon. And, you know, there's those people on the side of the road that just have the water cup stands. And then, like, you're running a marathon and you, like, reach over and you grab the cup and you, like, take a breather. Like, this is just a breath. Like, this is not a dead cat bounce. This is a breath. In order for us to say, like, we've had a dead cat bounce, you need to at least confirm a prior day's high and then build over that for, like, a couple days. Right, to kind of show, okay, market's going up now, right? You need the feeling of everyone's like, whew, the selling is over. We're coming back up. And then boom, you get stiffed. And then it comes down one more time. And the next time will be just as fast and as violent, right? Where it might take a week or so to get down there. These are just pauses. Like every single green day that we had is just a pause. It's not like a true dead cat bounce. You know, but like how many people do you think on Friday were thinking that that's the low, right? Especially that the way that it closed. It would have been very easy to think that, okay, yeah, this selling is over. We're just going back up to the high side now. And then what happens today? Literally just wipes out Friday's low in a blink of an eye. These are be my ultimate zones down here where if we can get in, we are going to make so much cash. The sooner the better, right? Because we're all impatient people. Me being the head of that. I just want to just get down there. Just let's go down there so we can start this road to recovery. But I already know what I'm going to need to hear. I'm going to need to hear that the tariffs, I need to hear something with tariffs where they're either lifted, either there's a mutual agreement that every single party involved is okay with. And I'm going to need to hear the big one that I want to hear is the fucking rates are being cut. I need to hear rates are being cut. If rates are being cut, it's go time. And hopefully if I hear that, it's somewhere down in here. Like if that's the case, it's completely go time. I'm telling you guys, we're going to be fucking rich. I just want to get everyone on board where you guys all have some dry powder so we can actually attack this. because I know that there was a lot of people who really, really missed out on that flash crash we basically had in 2020. The market rallied for a year straight. I mean, literally, guys, you can buy whatever you wanted to. SPACs, new IPOs, growth names. I mean, all of this nonsense and bullshit. Everything was going up like crazy. It didn't matter what you bought. You just buy today, it takes out yesterday's channel high. You get long 2 or 3 days later, you're up thousands of dollars. I knew people that were buying 10, 15, 20 options contracts on absolute bullshit, like companies that never came back. And they were making tens of thousands of dollars a week. And guess what happened in 2022? They didn't see this coming. And once we got below that 50, they thought every little bounce was the dead cat bounce. So they were buying more because that's what would happen, right? You just on a bull market, you just buy the dip. Just buy the dip in a bull market. It comes back. Here's the thing in a bear market or in a correction market. You're short the pops, short the pops, short the pops. You continue to short these pops until you're back over the 50-day moving average. There is no if, ands, or buts about it. Continue to short pops until you're back over the 50-day. But once we get back over the 50-day, should be ready to go. And if not, well then, it was a pleasure meeting all of you guys, but I would be dead. Not literally, but financially. Because I am banking so hard that I'm going to play this right. Based on history and based on what I've seen before, that if this does come into this zone, right? Again, because anything is possible. But let's say we got down into this zone and your boy D is loading up here, making his money day trading, and he's loading up here in cryptos. He's loading up here in stocks. He's loading up a little bit more here. And then all hell breaks loose. And we go into World War III and this market does something like this. Oh, I am absolutely cooked. But it's not like I'm buying here and saying, hey guys, I'm buying this dip, market's going higher. It's not like I was right here saying, hey guys, we're getting close. We're not there yet. But if we do start to lose this zone and this range acts as resistance, forget about it. I am cooked. But I got a good feeling. I got a good feeling. I just want to make sure we're all making some cash with these prop firms, right? Let's make some cash with these prop firms so we could set ourselves up, guys. The prop firms is not the end all be all, man. It's not the end all be all. It's cool for an additional source of income, but trust me, you trading your own personal account and you throwing money around at these bigger type plays is where you make a lot of money, guys. Is where you make a lot of money. Wow. Seahawks signed Sam Darnold. $110 million. My son's going to be, I don't know if he's going to be excited or not. He's a Hawks fan. Did he want him? I think he was okay with him. I think he wants to draft Jackson Dart and sit him for a year. I'm excited though. We picked up DK Metcalf. I'm a Steeler fan. I'm excited about that. Football teams, guys, if you got them, put them in the chat. Let's hear it. You got a football team, put it in the chat. Next stop, I think, could be 463 this week. 463 this week on the Qs. Texans, you guys got a hell of a quarterback. CJ turned everything around, man. CJ's a local boy. CJ's from out here where I'm from. About an hour and a half away, but he's a local dude. A lot of Oh no, no, not CJ. Not CJ. I'm all fucked up. But CJ's a hell of a quarterback. Our local boy is Jaden Daniels, Redskins, tearing it up. O line is trash though, yeah. And what's good with your guys' wide receiver? He tore his knee up, right? But a hell of a turnaround though. I mean, Texans were left for dead. Hate the Steelers, so obviously you're a Browns fan. Yeah, I know. Yeah, Browns fans are the old dog pound's been in the dog pound for fucking 30 years, right? What is the quarterback situation going on over there with the Browns? That's my question. What is that quarterback situation looking like? Yeah. It's like the Browns are notorious for drafting like the worst potential QB1 that they could draft every single time. The worst. It's like the Raiders. Always have a great pick, draft the worst selection that they could draft all the fucking time. They just can't get their heads out of their asses. And it's not like we did any better. I mean, Steelers are notorious for not drafting quarterbacks. And the one year we do, we draft Kenny Pickett, which by far was the worst QB1 type of pick that we could have ever picked. I mean, you can never trust a man with small hands like that. I seen that. You guys signed Garrett to a huge deal. I mean, a huge deal. I mean, the man deserves his money, but I mean, absolutely huge deal. That's crazy. Crosby got a big deal too with the Raiders, right? Garrett obliterated that deal. Thanks, Conrad. Well, I don't really know what else to do here. I don't really have any interest in chasing this short anymore today. Maybe we see a small little consolidation to the upside here. I mean, the day is essentially over, right? 4% down. Even if we close at 3% down today, it's still just a negative day in the books. You got about an hour and a half left of the market. I mean, what's really going to happen? You're going to reverse 700 points? Probably not. Any 50, 100, even 150 point bounce, 200 point bounce does absolutely nothing for the dynamics of the market. What do? Continue to trickle down another 50 to 100 points? Not really a whole lot here, guys. I'm just kind of hanging out BSing a little bit. But, I guess what you could really start looking at for tomorrow is what is the potential, right? What is the potential for tomorrow? Do you get a dead cat bounce tomorrow? Maybe. Does it signify that the low is in? No, right? You would need to start building upon a previous day's channel and actually start reclaiming some supply. And, in short, that would at least be 492s on the Qs, right? On the NQ, that price level would be NQ. I mean, you would need to get well above 20,200. So could you see what people would say is a dead cat bounce tomorrow, where market closes green? Absolutely. You could definitely see that. So we want to be prepared for that to happen tomorrow. Does it mean that the selling is over? No, just keep that in mind, okay? So before you go out there racing to just, okay, the bottom is in, it doesn't necessarily mean anything like that. But you can definitely see, because of the severity of how we've pushed down since losing the 50-day moving average, the 50 SMA, you could see a dead cat bounce where maybe there is a 1-2 day, even a week type of rally, back into 20,500s. The sooner you get that, the sooner you'll be able to tell if we're going down to those lower prices where we are going to drop 20% again or more, which is my thoughts on this cycle. It would be the strongest and healthiest thing to happen, but we'll see. So, because I know I've seen it before. The moment we have a green day, everyone's going to be saying that the bottom is in. And it's like, it'll do that for a few days, and then boom, it'll just take you out again. This is not over until we get way up over here. And we do that. That would be a 50-day moving average. That's it for me, guys. Hope you guys enjoyed the stream. If you did, make sure to hit the like button on your way out. If you guys do need evaluation accounts, because again, we are human, we do blow them. We are idiots, I included. 80% off Apex. Use code DAnthony. Hit the like button on your way out of here, and I'll catch you guys all in the next